IBM is 113 years old company.
Makes money by selling software, cloud services, powerful computers, particularly quantum computers.
They are absolutely at the forefront of this, miles ahead of anyone else. If we look at the share price over the last 12 months, the IBM share price is up 54% compared to the S&P 500, which is up 14.5%.
The market is valuing IBM at lower rate.
Quantum computing and qubits just massively increases the scope and power, looking for solutions for things.
Businesses don't know how to deploy AI, don't want to expose their data for companies like ChatGPT, Gemini. They want to do it internally. Companies like IBM would help them.
That kind of revenue is a lot more stickier.
If any listener was considering investing in IBM, I think you need to take that into account. Welcome to the latest episode of the Intelligent Wealth Podcast. And with me today, I'm Tony Byrne, my usual great guests, Carl, who's fellow director of Minerva Money Management, and Awet, who is our head of research, no less. This podcast is for serious investors who are looking for insights into various leading companies in the field of what we call quality investing, which our research has shown is the one area of investing that gives you the best returns as opposed to other styles like value and growth, for example. So we're not going to give any advice today. These are just our own views. Some of the companies we talk about are in our fund, some are not. The subject of today is IBM, which we're not invested in, but it's an interesting company to discuss. What we are going to do is focus on the value we can bring you. So the idea is that we can save you some time doing your own research. You still should do your own research, because if you don't, and if you just follow other people's tips, it usually goes wrong because other people have got different agendas to you and different timescales. So always do your own research. Hopefully this can help you towards that research. That's all. So remember, investing in shares is risky. Prices can rise or fall. You may not get back the full amount you've invested. I'm sure you know all that anyway, but I thought it was very important to remind you. So without any further ado, we're going to go on to the main subject of today, which is IBM. Now, IBM, probably the only one of the three of us in this discussion who remembers IBM in their heyday, because I'm that old. But IBM back in the 60s and 70s, now I must admit, in the 60s, I was only a boy, being born in 1958. But I remember IBM was so dominant, they were the equivalent of Microsoft today. They were just giants of the IT industry. And IBM specialized in what were then known as mainframe computers. And they made a fortune out of it year after year after year after year. And what happened was that, like a lot of companies who are successful in what they do, they get a bit blind to another emerging technology coming through or competition coming through, which is more sought after. And what happened was that desktop computers started to become popular, and companies like Microsoft got in on this act very quickly, particularly with their pre-installed software on various desktops. Desktops became the norm and rapidly overtook the concept of mainframe computers. IBM wanted to stay in that industry because they were making so much money on every mainframe that they sold. They didn't want to accept that desktops were taking over. This was probably in the 70s now. So IBM, that was the equivalent of a Magnificent Seven company in the day, then became pretty low profile and pretty unknown for many years. But what we've noticed is that in recent years, it's kind of re-emerging and reinventing itself, which is what we'll discuss in more detail during this meeting. So today, IBM makes its money by selling software, cloud services, powerful computers, particularly quantum computers, which we'll go into some more detail about. And they offer expert consulting to other companies, including other giant tech companies. So going back to historically, they also introduced certain products which aren't so well known today, but it's almost like a history lesson. They created the magnetic stripe card, floppy disk, because they, believe it or not, disks were actually floppy originally. They literally were bendable, like a record, like a vinyl record. But they were bendable. They invented hard disk drives, a language called SQL, and relational databases. So they've been the founder of quite a lot of innovations, IBM, over the years. A high quality company, but I think you'll find they're very interesting what they're into today. And I'm going to pass you over to my eminent guest, Carl, who's far more erudite in this subject than me. So over to you, Carl. What are your thoughts about IBM?
Yeah, IBM, really interesting company, and it's fascinating to talk about them at this point in time because I think we're at a crossroads for that company. IBM's been a very successful company, for many years, just been running along, ticking along, but the share price hasn't really gone anywhere. Through the late 90s, 2000s. But then all of a sudden, if we look at the share price over the last 12 months, the IBM share price is up 54%. Compared to the S&P 500, which is up 14.5%. And if we just look back at that, a bit longer term, over 5 years, IBM share is up 125%, compared to about 90% for the S&P 500. So something is changing with investors and IBM. And I think there's two key reasons for that, two key areas that they're now focusing on, which is popular, and that is one, AI, and the second one is quantum computing, which we can discuss a lot more later. Yeah, but it's still a huge company, IBM. If you look at its kind of scale, it runs in about 170 countries. It employs over 250,000 people. But yet, from a market cap point of view, its market cap's only around 250 billion, which compared to some of the other big tech stocks, their market caps run into the trillions. So there's potentially a lot of upside that hasn't been captured yet. So I think that's why it's a really good time to look at IBM. Interestingly as well, they pay out a dividend, which not a lot of tech companies tend to do. Their dividend's around 2.5% at the moment, the dividend yield. But what's interesting is they've consistently increased that dividend for around 30 years. So if you think of all the catastrophes that happened around the world and all the big market downturns, the dot-com bubble, the 2008 financial crisis, COVID, they've consistently through all that time increased their dividends. So that's an interesting angle for investors as well. In terms of kind of valuation and looking at kind of free cash flow, price to free cash flow, I think IBM are around about 20 at the moment. So 20 price to free cash flow, which compared to Microsoft, they're about 50. Apple are about 30 and Amazon are well over 100. So again, from a valuation point of view, they look quite interesting. I don't know what you think about that, Howard.
Yeah, I think there's a reason why the market is valuing IBM at lower rate, because if you look at the growth rate, historically, IBM hasn't grown much. In the last 10 years, the share as compounded growth rate annually, the share price is pretty much down 3.5% as a growth, basically the revenue. And when we look at the last few years, 3 years, I think that their compounding growth rate has been around 2.5%. When you factor that into your valuation, you can see IBM has not been growing much historically, and the market is factoring that, even though the market is currently implying a 9% growth for IBM shares. But historically, IBM hasn't justified the 9% growth. But when we invest in the future. And the key point is from now on is, IBM is investing in very, very interesting markets. For example, you mentioned, Carl, AI, which is expected to grow around 36% until 2030, which is compounding growth rate annually. And hybrid cloud, again, is expected to grow by around 13%, again, with AI consulting, because we are, emerge into AI and consulting in AI. If you look at IBM booking, most 80% of their consulting is AI booking. So you can see it's growing around 26%. So they are in the right market and reinventing themselves, because what we know, IBM is an old company, 113 years old company. So it's just reinventing, and the market is implying those sort of growth from the future. And I believe the market, IBM can pull these things out. As you mentioned as well, in quantum computing, IBM is pretty much seems to be ahead in comparison to other even Google are, working on quantum computing. Microsoft are working on quantum computing. Even like there are any other startups, they are approaching in a different way, even though the argument is the application would be 5 years away. But the real application, it might take, 10 years, 20 years. We cannot really see it yet. But at some point, these companies are investing billions and billions into it. And IBM recently, I think they made around 30 billion investment so far in quantum computing and AI and so on. So at some point, they believe this is going to materialize. And what we like to see as well, as I mentioned earlier, we need to see insider ownership. IBM is not a company that run by a visionary founder, as we say. When we look at what we look for a company, we want to see insider owners with significant shareholding. And you can see IBM has total insiders have 0.10%, which is 0.10%, which is very small skin in the game. And his CEO has 0.05 skin in the game in the company, which is worth around 120 million. So the management, they don't have significant skin in the game. But the reality is IBM is reinventing themselves, and they are in the right trend of investment.
I think on the thing with the skin in the game, though, you have to look at IBM slightly differently, because this is over 100-year-old company. So, and it's changed lots of times. You can't expect the original kind of founders and things to be still involved with the company. So I think there is reasons why, there is low skin in the game as such, because it's just been going for so long, so many different shareholders, so many different kind of owners, CEOs, all that sort of stuff. So I think there is mitigating circumstances around that kind of point.
Yeah. Carl, I had a burning question for you, which we discussed offline before this presentation. You mentioned in quantum computing, you mentioned this term qubits, and I didn't understand it. So for any listeners who don't know what a qubit is in context of quantum computing, maybe you can explain. Sorry to put you on the spot, but I'm sure you can explain it.
Oh God, this will be a really terrible explanation for those that are far more cleverer than me. But the way I've kind of had it explained to me in the past is that a normal computer that we all use today, that we're using to record this kind of podcast on, uses bits, bits, and each bit is either a 0 or a 1. So computer code, it's all 0 or 1s. You're gonna the light switch is either on or off. It can do those kind of calculations. Whereas they're classed as binary systems. Whereas if you start talking about qubits, a qubit can be a 0 or a 1, or a 0 and a 1 at the same time. So what that means is that it can, rather than just run one objective at a time, it can run multiple scenarios. So a good way to think about it is, if you're in a maze and you're looking for your way out of the maze, you're usually only going to just try one path at a time, aren't you? You're going to right, I'll turn right. Can I get to the end? No. Right, I'll try another one. Whereas like a quantum computer in qubits will just try all the paths at the same time. So it just massively increases the scope and power for kind of, looking for solutions for things. So it could be absolutely amazing for advances in medical, science and things like that. Because at the moment, the standard computers have to try, one check at a time, whereas you can plug something into the quantum computer, it's going to just check tons of different scenarios all at once. So the speed of process is just going to be amazing.
Yeah, the other thing, of course, you mentioned, Carl, was that these computers have to be stored at very, very low temperatures. So unless you've got like a walk-in freezer to store it in, you're going to have trouble having one in your own home, aren't you?
Yeah, so I think this is where we're at very early stages of quantum computing, and if so, I suppose the downside or the risk going to a company like IBM is if this quantum doesn't actually ever come to anything, because at the moment today a normal computer can obviously run at normal room temperature, you're absolutely fine, but quantum computer, because it runs so fast and does so much sort of processing at once, it gets incredibly hot, so it needs to be stored.
It needs to be cooled down,
really, really, really cold temperatures that are just not practical for everyday offices or homes. So there's a lot to do in this space to make it actually kind of practical technology, but the potential for it is obviously huge.
Yeah, it is huge. I think if you remember Google in 2024, they came out with this breakthrough, the new Willow quantum chips, which can perform tests under 5 minutes. That normally takes a normal computer 10 septillion years, which means 1 followed by 25 zeros. So the breakthrough is going to be huge in terms of like how it's going to revolutionize how we do things. A breakthrough in healthcare and other part of the drug discovery and nuclear fusion and machine learning and cryptography. I think we discussed it before the podcast earlier on about like cryptography, how the password will be fragile if quantum computing will come in a few years' time. I think most businesses or companies have to prepare for the risk that pose quantum computing.
Yeah, that really would be a risk, wouldn't it, if encryption went by the wayside?
Yeah.
It needs to be some solution to that, something even more clever than quantum computing to counteract it, I suppose.
Yeah. I mean, the key point going back to IBM though is that they are, if this quantum computer does ever come to fruition and comes to that kind of the next stage of computers, they are absolutely at the forefront of this, miles ahead of anyone else. So obviously at the moment that area of their business makes no money, so it's all subsidized by other areas of their business. But they've quietly built the largest fleet of quantum systems in the world, partnered with the top global enterprises. So it's almost like they're doing what Amazon did for Amazon's web service, in the cloud computing. Everyone thought Amazon was just, selling stuff online, but no, their key, most profitable part of their business is their cloud service. And that kind of went under the radar, didn't it, for years? They quietly built out all this kind of server capacity. Then all of a sudden now they're like the leader in that area. This could be exactly the same for IBM.
Exactly. Yeah. Very, very, very fascinating.
Yeah, I think that the interesting part as well, when we look at their financial, the margin is still healthy, 57%, even though the software margin is huge, around 84%. So the software business is quite profitable, but the total margin is around 57%. And when we look at operating margin, it's still around 16%, and it's still, free cash flow margin is still 20%. The company is still allocating capital quite well when we look at the return on invested capital, which is not preferable. We prefer anything above 20%, is 6.4% compounding annual growth rate in the last 5 years. Return on equity, 23.3% in the last 5 years. And it's not uptrending. The concern is it's not uptrending. Even though they are investing, they're still downtrend the return on capital. We would like to see that uptrending, because you want to see, the company is highly generating return on capital. When you look at the balance sheet, the net debt is still 50 billion, still a lot of debt they have. And that's why pretty much you could argue the return on equity is higher, because if you take a lot of debt, your return on equity is leveraged. So it's always going to be looking higher. So it's kind of misleading in a way. Yeah, that's few things, but overall, I think the financial is still is good in financial position, but it's not desirable for us as a financial position. You want to see significant growth in the financial and allocation of capital, for example.
Yeah, I mean, all good points. But of course, as we said earlier, that's all historic, isn't it? Look at the last 5 years. It's not really relevant to the next 5 years. The trouble is, none of us know whether IBM are going to be mega successful with quantum computing long term. We don't know. They're probably in the best position to benefit from it, but it's, as Carl said, it's not totally proven yet. So if any listener was considering investing in IBM, I think you need to take that into account. To a degree, we probably consider it too uncertain for us. Yeah, so you've got to make your own mind up, haven't you, whether it makes sense. But certainly the sentiment seems to be moving that way. And I do like the fact they've got a specialism there, different to the other giant tech companies. They're focusing on different things. They're focusing more on AI, aren't they, than quantum computing?
I think it's worth mentioning the AI angle, because what I really like about them and their approach to AI is they focus on the business enterprise element. So whereas a lot of these other companies are trying to, build ChatGPT and, go direct with products to consumers, IBM are going in at it from the point of view of building systems for large businesses and things. And that kind of revenue is a lot more stickier than us as retail kind of people that we just pick and choose the next, like whether it's Gemini, whether it's ChatGPT. We're just not that reliable or loyal, are we? But when a business has spent millions or billions on an AI infrastructure that IBM have built, and then they continue to pay them recurring revenues, because I think half of IBM's revenue is recurring. It's recurring income, which is always
that's very good. Yeah.
Then I think that's a good angle for the AI. I think I saw somewhere online or read somewhere that on the AI side, it's almost like NVIDIA is selling the shovels, Amazon is renting out the land, and IBM is building the office buildings. So they're not competing directly with someone like NVIDIA or Amazon. They've got their own little niche in AI. So I think whilst we're saying the quantums, that's for the patient investor, that's something that could come to fruition next 5-10 years. I think what they're doing in AI now is actually really interesting as well, and that's maybe why the share price has gone up as much as it has.
Yeah, I think if you look at IBM is reinventing themselves, because if you look at there's three areas that are investing in, for example, AI consulting. Most businesses, they don't know how to deploy AI, and they're looking for a consulting someone who can advise them how they can deploy it. And IBM is one of the biggest beneficiary from this, especially because most of them, they don't want to expose their data for like companies like ChatGPT, Gemini. They want to do it internally. So companies like IBM would help them to implement how they can deploy AI internally and so on. And again, even if they don't win for the quantum computing, they're still on the two market they are in, hybrid cloud. The migration to the cloud is still early. Everything is immigrating to the cloud, and it will take years, and it's growing. Again, migration from to the cloud and is still early, as I mentioned. And yeah, I think we can see this is growing. AI consulting is growing, and AI is growing. So they will benefit from all these three things.
Also, the good thing is, like Carl said, they're not competing on the retail side. There's every giant tech company is investing tens of billions of dollars into AI, but they're all competing on the retail side, not on the business side, which IBM's doing. Like one of the CEOs of one of these giant tech companies said recently, we're investing all this money, tens of billions of dollars. We don't know if it's even going to work. Whereas IBM, it is working already. So I think that's quite, dare I say, that's quite foolish of a CEO of a giant tech company to say that. I mean, they're just gambling with the future, whereas I don't think IBM's gambling. They're already getting the revenue from this AI consulting, and that's where the big need is. I mean, there was one giant company recently said they were sacking thousands of staff and just replacing them with AI. And that's where IBM can give these companies a real advantage, because I've come around to the view, I don't know about you two guys, I've come around to the view that AI isn't going to destroy jobs. Well, it will do, but I believe it will create more new jobs. I think it will just raise living standards for all of us, and it will raise profits for all companies if they embrace it. So I think that they're onto a really good thing here, IBM. They're doing something quite different. We always like that.
Yeah.
Yeah, I don't know what you guys think.
Yeah, I think IBM is real. They are really into something. But when you look at the landscape, the risk is Microsoft, which is building the quantum computing, and Google as well. They are building it. These companies have significant money behind them. They have businesses that they're generating billions and billions. So the landscape is going to be competitive. And the key risk is historically, those companies have been pulling things up, hiring, paying millions of top talents. So the key question for IBM is, would they execute this moving forward? I think there's a risk because Microsoft and Google wouldn't allow, even Amazon wouldn't allow just IBM to continue and do this. It's going to be a very competitive market, but I think that they we'll see who would win, but it's going to be a very tough and challenging.
Yeah, true. So, gentlemen, do you have anything further to say about IBM? Because I think we've probably covered the key points, I think, so far. Is that fair to say?
Yeah, I think they're just at this crossroads, like I said earlier, aren't they? They're, if you're an investor looking at IBM, they've got a track record where they were once great, sort of went a bit mundane, but obviously continued as a solid sort of business for a number of years. And then all of a sudden, they've now started to reposition themselves and have taken two big bets in AI and quantum computing. They've got the capacity in terms of structuring countries and number of employees and things that if they get this right, it's not that they need to grow into a big company. They're already a huge company that's just not reflected in their kind of financials. So if you're a investor that believes in these two areas, I think they're absolutely kind of up there.
Agreed.
The downside, how it correctly pointed out, is that there is significant competition, and anyone that goes up against the Magnificent Seven, it's going to be really tough nowadays, isn't it? So, but I think they'll, even if they end up getting kind of bullied out by the others, I think those other companies are still going to have to look to IBM to purchase software or use some of their, because they're that far ahead in quantum, for example, that I just think, why we reinvent a wheel if IBM's already done it?
Yeah, agreed. Yeah, I totally agree. Well, sadly, we've come to the end of this week's show. It's been really fascinating. We'll be putting links in the show notes, and also we'll have a one-page summary on IBM, which is like a company snapshot, we call it, which is available for any listeners today if they'd like to contact us. The next episode, we're going to cover another very interesting company, which is a very successful European pharmaceuticals company called Novo Nordisk. So we'll cover that next time. In the meantime, if you're listening to this on Apple Podcasts, please do give us a review. It will be really appreciated, particularly if it's positive, because we rely on this to get more listeners, and we'd like to carry on running this show for long term and keep adding value to you. So without any further ado, thanks for attending today and look forward to next time. Bye for now.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.